The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 26th. Fantastic Friday edition of today's Trader's Edge. Hope everyone out there is having a great day. I'm your host, Stevie Perseverance Rhodes, who always knows that each of us should always be pioneers of our future versus prisoners of our past. Let's make sure we do everything we can to have a fabulous weekend. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I, we make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to throw at us. Today, our role is to go take a look at the circumstance of what the buyers and sellers are throwing at us. We'll do that. And of course, I'm absolutely grateful for your presence here today. Now, I'm here to serve you. So feel free to pick up that phone, dial on in at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. This is Fantastic Friday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow up 36 points. She's trading at 17,927. S&P is off 4. Composites down 43 points. Russell's off about 8 points. The DAX finished up 19 points. The FTSE down 54. Gold is basically flat, up $2. No big deal. Silver off 7 pennies. Light sweet crude trading back 15 cents. Let's start picking apart this market one by one, get a feel for exactly what it's doing out here. Moment of truth, perhaps, in some areas. Let's start off by taking a look at the daily charts here. Let's look at the NASDAQ. Let's look at the NQ. Let's look at the futures contract here. NASDAQ is the one that's getting hit the hardest, so a little bit of a moment of truth here. If you're watching this on TigerTV, I hope that you are. You're looking at my daily chart. This is the September contract for the NASDAQ futures for the daily. And what you're going to see is a little rising price channel. So price has come back here as we speak right now. I mean, price is really at 44.67. It's resting right on the rising price channel out here. Now, if it breaks this area, and that's an if, right? If it breaks this area, that says that price will come down and it'll test these lows out here where the bulls have been basically defending their position June 9th, between the 3-candle session of June 8th, June 9th, and June 10th out there. You had a nice little morning star reversal candle that says that the support is the low of that June 9th area, 43.90. So any break of this rising price channel says that that would be a likely area to get tested, 43.90. Nice little bullish engulfing candle that took place back here on June 16th. That says that its low out here really becomes a support area, 44.37. So that's the area where price would head to, in my opinion, if in fact the NASDAQ continues to put selling pressure on today and cracks below this rising price channel. Otherwise, things inside the NASDAQ have just simply come back to support on its daily chart, and that's what's going on there. Let's go take a look at what's going on inside the S&P futures contract. Really the same thing. We'll look at the September contract. We'll take a look at its rising price channel. Voila. Same pattern out here. Price has fallen back to an area of support that's been in place really going back into December of 2014. So this rising price channel, different than if you were to go back and take a look at the Dow or the S&P as an example going back to 2009. So we're just looking at a shorter term rising price channel. Nonetheless, really the same pattern is in play here. If this area fails, we're at the 2088 level, price ought to go back and test support. Now support, you've got really two areas, just like we had on the NQ. The first area is going to be the June 9th low, and that's going to be 2068 and change out there. And the second low is going to be the low of June 16th, 2062. So 2062, 2069 would be the level of support if we see any significant break below 2,088. We'll go take a look at that to see what price patterns might be out there if, in fact, that level were to be, or whether or not, we'll take a look at an intraday chart just to see if we can get a feel for what's going on there. So that's what's happening in those two indices. Now, if we were to go take a look at the Dow, I'll punch it up just for the heck of it, just for blanks and giggles. You know what I was going to say there. And here we don't really have a rising price channel, right? We just really have a lot of sideways action out here. So inside the Dow, which has been a bit stronger today, there's really two ways for you and I to take a look at it. Let's first take a look at it the way on a daily chart that we should be looking at, and that is taking a look at the summation index for the Dow. That's going to be your right-hand side screen. In fact, let's just go ahead and blow this up. Here's our daily chart for the Dow. And what you and I know as we speak right now is that the price oscillator is below zero. Reading is minus 0.92. That says who's in control. Even with the Dow being positive, even though it's been positive most of the day, the price oscillator, maybe just for just a few short minutes, had gotten above the zero line. But basically, it's back below zero. When it's below zero, it's very clear with regard to who's in control, and it is the sellers in control, even in the Dow, even though it is positive at this stage. In fact, remember yesterday we took a look at these price oscillators. It was the NASDAQ composite that was the holdout. However, going into the close, it dipped just below zero. Now, it has extended that move, and clearly, when we take a look at price oscillators, nothing is in the oversold condition from an oscillator standpoint. Yeah, and sellers are clearly in control when we take a look at the daily charts. Now, because the Dow has been inside this sideways range out here, the only thing that I can really do is take a look at an intraday time frame chart. And that intraday time frame chart is going to be this one for the Dow. And as we take a look at it, this really helps to for the Dow, which has been strong, but stronger during the day, and we're taking a look at the futures contract, just take a look at the descending price channel. And even though price got just slightly above it, it closed slightly above it at the time period of 10 o'clock this morning. This is a 2-hour chart, by the way, that we're looking at. Of course, whenever you break an area of resistance, you like to see price come back and test it, reject that area, whatever that resistance area is, to prove to you that it's a real breakout. Well, in this case here, the Dow failed to do that. Price came right back into the top of the descending price channel. We can see right now what it's targeting is it's a swing point that took place between 2 and 4 o'clock in the morning. The low on that inside the futures contract was 17,787. That happens to be a seventh wave pattern to the downside out here. That's the bull's last bastion of hope, is that area does not get tagged. If it does get tagged, we see one tick below that. Price ought to move down to the bottom of that descending price channel. Now today, I don't know that it would get there, but if it did, you'd be looking at a price point of about 400 points to the downside. 17,745. That would only be about 75 more points to the downside. So that most certainly is a doable objective. But it was the Dow that has been green, has been the strongest yet. When we take a look at what's going on inside the summation index, buyers never really were able to get a foothold, and that descending price channel truly acted as resistance inside of its futures contract. That was taken a look at the 120-minute time frame. So that, in essence, is what's going on inside of the market from an overall. So I think I did that in record time. That was like about 6 minutes. There's really nothing else, I think, for us to look at, right? So happy Friday, everyone. I'm just kidding you. I wouldn't do that to you. There's plenty for us to go ahead and take a look at. Let's go take a look at the VIX index. VIX index right now trading at 1475. So that is well above the 50-day exponential moving average, 1383. But let's go check in. And then when I say well above, let's go really see what kind of percentage move have we had today inside of the VIX. Only 5%. You know, when just these 5% days, I think yesterday was about 5 or 6%. That's not a good sign for bulls out there for sure, because anytime price is above the 50-day exponential moving average, whoops, let me come back and take a look at it. And you can see it's very clear on any chart that you would put out there. That's where you start to see real carnage inside of the market out here. Take a look at, just come back into the December 2014 level. The yellow line on my screen, that's taking a look at the top panel out here. That's your 50-day. You can see the bottom portion of my screen. That's the S&P 500. That's really where you ought to gauge what the VIX is doing. And we can see that every time the VIX gets above that level, that's where you start to see some real price erosion out here. You don't have to worry about what the number is with regard to the VIX. I don't care if it's 8 or it's 12 or it's 10 or it's 50 or it's 75. It just simply matters where is it in relation to the 50-day exponential moving average. If you just keep it clean like that, you will do simply mighty fine out there. Now, of course, in doing that, you're not going to be able to call the top tick or the bottom tick out there, but it will keep your overall trading in the right direction out here. So that's what's going on inside of the VIX index. With regard to today's trading range, the opening range here was between 2,091 and 2,100. So you had about a 9 to 10 point move out there. We can see that the low of that range was broken right as we were coming into the 1250 to 1 o'clock time frame. That level was broken. Where's price headed to? Well, we know we saw price head on the daily chart for the ES Mini right into the resistance of its longer term. When I say longer term, going back, I think that was in the 2014 rising price channel. So price ought to have found support right about here in the NASDAQ inside the ES Mini. If I were to take a look, though, at a intraday chart, at a 30-minute chart out here, let's put this up on my screen. What I'm not finding out here is really any kind of support. So when we take a look at, there was support this morning, and there was a nice bounce that took place this morning, nice little price relative strength divergent pattern, much like in the case of Gilead Sciences. We'll go to Garo after this break. There's only 2 minutes out here, so we'll go to Garo after this break out here. But when we took a look at Gilead, which we'll do after that, we saw that price divergent top out there. So we'll go see how that is performing. But the same thing that took place here this morning at about the time frame. Let's take a look at this at the time frame of about 11:30. Well, it was last night, 11:30. Last evening, we saw a nice little bounce out here, and then, of course, price gave it up. Now, with regard to the ES Mini, no real pattern. There's no price relative strength divergent pattern to the downside. There's no seventh inning stretch. That was taken out as we came into that 1 o'clock session here on the 30-minute chart. So there's really nothing that you and I, and that I can take a look at, that we would hang our hat on an intraday chart. So you have to just simply fall back into that daily chart for the ES Mini with regard to that little rising price channel out there. As far as other things going on that we should be paying attention to, let's go see what's going on currency-wise. Let's go take a look at that euro, Japanese yen, see if there's any kind of diverging pattern out here. And the answer is no, there is not. You've got the currency pair just trading back just slightly out here. There's really been no trend for the last, well, since about the early part of June out here. Nary a trend to the downside. In fact, yesterday's candle, many might go ahead and confuse that and think that looks like a hammer candle, but it's not. You've got to have an established trend to the downside, and there's just really no established trend to the downside inside of the euro. In fact, really, you're trading inside of the candle session from June 3rd out here when we take a look at that. So it has not busted those lows, hasn't really done a whole heck of a lot, but it's not doing anything to create any kind of headwind for sellers out here as it's trading sideways to slightly lower. Right now, we got the Dow. She's still up, but don't forget, it's sellers in control. She's up 25 points. S&P's off 5, composite down 46. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 12, S&P's off 6 now, composite down 51. Let's go out to California to our man, Garo. Garo, thanks for calling. Thanks for holding. How you doing today?
Very good. Thank you, sir. How are you?
Good. Am I pronouncing your name properly?
Yes, sir. Garo is the name.
Is it spelled G-A-R-O?
Yes, sir.
Very good. Now, what's the meaning? What's the meaning behind that?
Nothing. It's a name like John, like Sam. Is nothing. It's a very common Armenian name. Very common.
Oh, okay. Okay. Well, you know, I Googled it real quick because I wanted to make sure at first I was pronouncing it properly. And it said here that that the name has the appreciation for the finer and deeper things in life. Does that sound like you?
Somebody else has to judge that. I cannot judge that.
Well, we'll say that it does. We'll say that it does. It has to because you're part of the TFNN family. So let's take a look at. So you want to take a look at Gilead Sciences again? Are you still in the short trade there?
Yes, sir. I shorted 700 shares yesterday after I talked to you
Yes.
at $120.70. I'm waiting to come to 118 or close to 118 and get out of it because I don't keep nothing over the weekend, Saturday, Sunday. I want to sleep and have a calm weekend. I don't want to be nervous until Monday. So After that, I want to go after some other stock. On Monday, I'm going to go after VRX. That is a different story. But I want to know that your idea regarding that. Will that reach to 118 today, or should I get out now?
Well, let's take a look. So with regard to that question, that 118 level, folks, was the 21-day simple moving average area that Garo also uses as one of his tools out there. And if we just simply take a look at the 10-minute time frame out here, at about 1 o'clock, so as we were coming onto the air, you did get a little bit of push to the downside with some volume on it. There were 275,000 shares. This is a 10-minute chart out here, and this says that, so this won't tell me whether or not it can make its way down to that 118 area, but I don't see anything at this stage on a 10-minute chart that would say that it couldn't. Because, it's broken down below a market profile on a short-term chart. This had really a bullish formation on a 10-minute chart out here, since I know you're looking at a lot of intraday charts. You had some volume as it busted through that area. Resistance on this ought to be about 119.60. Maybe it's a few pennies below that on any kind of bounce. You're 119.07. So that's what a 10-minute time frame shows me. If I switch to a 30-minute time frame, and I'll do that just to take a look at for some areas of support. And in this case here, it also broke through a level of support, which was at 119.49. So that becomes your area. As long as it doesn't close above that area or get above that area on a 10-minute basis, a 30-minute basis, then you at least have the, it would seem like it is that there's lower price, whether it gets that 118 level, only a buck lower. There's nothing here that would tell me whether it would or wouldn't. I think yesterday we were looking at this, and we were looking at that high volume day from June the 19th. And I believe the low on that, you can correct me here, I think it was 119.55. And so the benefit there is that you're below that. Now, you are below that with lighter volume. But I know that you don't utilize volume necessarily as any tool out here. But I will say that getting below that area at least is a positive and would open up that door to get towards that 118 area, whether that's today or whether that is. So I don't see a reason for you to close it out here. That I don't see as we speak right now.
Very good, very good, very good. I will keep it for you because we have another 2-3 hours to go, and because it gets closer, it gets to 1, then I get more nervous about it. That people may cover the shorts, and then that will shoot up to maybe 119.50 or close to 120.
Yeah, no question. What's interesting, I didn't complete the work on it, is that today, I believe today, because it looks like we'll have a negative close. And I'm looking at the S&P 500 when I'm stating that. And I believe that today would be the 6th Friday in a row with a negative close in the S&P 500. That hasn't happened in a long, long time. And when I mean long, long time, I'm talking years. Yes. It also would also mean that the market perhaps is getting exhausted to the bottom as well. So that's the best input that I can provide for you. As always, thanks so much for calling, and have a weekend full of finer and deeper things in life, my friend.
Thank you, sir. I appreciate it. Thank you.
You bet. This is Steve with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 24, S&P is off 5, composites down 45. Back in the 70s, late 60s, 70s, when I was putting myself through college, I was working for a pretty medium-sized accounting firm. I didn't want to go work at the Big 8 at that time because they really just wanted you to work in the audit department, and footing and ticking just really was my thing. So I worked in the tax department for a medium-sized firm out there, and the one of the clients that I worked for was Armenian descent family. Some growing up in the Detroit area was the Alex and Richard Manoogian. They started Alex, I believe, was the one that started Masco Corp. Masco Corp has touched most people's lives. Most of you have some type of Masco fixture inside of your home, whether it's in a bathroom or it's in the kitchen. I think it's Delta and just a whole slew of folks out there. Big philanthropists specialist in the Detroit area out there, and it was very cool working on their tax returns. Figure as a young kid in the 20s, and I won't reveal any of the information, but it was pretty amazing to work on that. In any event, let's go out to Orlando to Rich. Rich, thanks for calling. Thanks for holding. How you doing today?
I'm doing well, Steve, and yourself?
I'm doing very good, thanks. You still trading in and around the natural gas contract?
I sure am trying to make this thing work. I'm a little confused. That's exactly where we are right now. It seems like we talked to her a couple of days ago, and you had indicated that it looked like it was an ABC up, and it looks like it had made that particular move. But right now, it looks like it's coming back, and I'm confused. I don't know if we have an ABC going up further, or because we had volume yesterday on the move up, so it seems like it's coming apart today, but I don't really know.
Well, the good news is when I get confused, it means I'm about to learn something. So that's
right.
That's the positive out here. We'll go see if I can learn something out here.
Well, where I am at is I am the position of the DGAZ.
Yeah.
I'm in at 590, so I'm ahead on that. But it looks to me like I should take my money and run, but I don't really know. Okay, so that's where we're at.
Okay, so when I looked at it the following day for you,
Right.
and thanks for that email, one of the things that you and I looked at was this. And this piece here was the natural gas seasonal pattern. So I just put that up there for folks. And on a historical basis, if you take a look over the last 11 years, natural gas, folks, tends to top out in the early part of June and then makes a bottom sometime in the early part of September. So that just gives you
to clarify, if I may, this particular chart you're showing is showing what, an average price for the last 11 years at those dates? Is that what that is?
It is. Okay. So I've left the price out because the price is really irrelevant. But this shows what the seasonal pattern is, in essence, by trading day. Now, I recall when I did this chart here, normally I do things by trading day. I wasn't that exact, so it's going to be off by a few days, one side or the other. But it's a good chart to give you a barometer as to, and I use this more so, Rich, from a directional standpoint, as opposed to a depth of a move to the upside or to the downside. Okay?
Okay.
And so that is the typical pattern. Then once you know what its typical pattern is, then you kind of can come back to the daily chart and get a feel for whether or not the analog is even working. If it's working, then it's something that you certainly want to pay attention to. If it's not working, then you just kind of, like other indicators or tools, you just maybe, put it off to the side for a while. But so we took a look at that. And you're short natural gas with the DGAZ is short, right?
Correct.
And so when we also took a look at it that day, there was something else that I noticed on, I think I was using a 10-minute chart, or maybe it was a 30-minute chart. Oh, let me put the 30-minute out there.
I thought it was a 30, but okay.
30. Yeah, no, okay. So let me just do that. I want to make sure. Yeah, it was a 30-minute chart. And on that 30-minute chart, what we noticed was that on June 23rd at 2 o'clock in the afternoon, and then followed back up at about 4 a.m. on June 24th, there were two hammer candles. And that said that low was going to be a key low, 271. Now, on the daily chart, that was at a 0.618 retracement of that first move on that pullback. And there you were trying to determine, should I stay in the trade or not? And based on those hammer candles, the suggestion was, hey, that was a good time to probably take your profits because price needed that, because there was likely going to be some type of move. Now, at that stage, I said maybe the move is that it's going to be an A to B equals CD pattern to the upside. That still really is a possibility out here as I pull this back, because let me just erase this out here for us. Let me go ahead and erase that.
And that's where my confusion comes in, is because, yes, it does look like it's actually, especially with yesterday's move up, with what appears to be some volume in it, in natural gas itself.
Yeah, I don't know. The contract I've got up here is the July contract, so I don't know. This may have rolled over here. Let me just see this. Let me see if this is rolled over to the next month, see what kind of volume is in it here. Yeah, okay. So you've got looks like the contract is in the process of rolling because you've got some pretty good movement, pretty good volume today to the downside, it looks like. Looks like about 170,000 contracts. But I guess the point that I'll make here is that until that low that you and I took a look at, that low for the hammer candles out there, which on a daily basis was the 0.618 retracement, until that gets taken out, my assumption, well, you've got really a couple of assumptions out here. One assumption is the A to B equals CD to the upside could still be in place. But what you and I have to recognize is that historically, you're inside the unfavorable seasonal cycle for natural gas. And what I mean by that is it typically moves lower between the early part of June to the early part of September timeframe out here. Now, that may make you want to sit on the DGA. Again, the DGAZ is the short, right?
Correct.
Yeah. Right. Maybe what you're going to do here is I go back to the 30-minute chart for you, and we take a look at that analysis. So we'll see what kind of volume, since it looks like we're into the active contract here. Let's just see, and there were hammer candles. It's not down there yet. I would say, Rich, you may be fortunate enough at this stage of the game to go ahead and get a test of those lows, that 273-ish area. And obviously, I think from your standpoint, you want to see price close below that. Again, the problem is now I'm switching between a 30-minute chart and a daily chart for you. But that's really I think it's pertinent in this situation, trying to help you to navigate and manage that trade. So it looks to me, if we just take a look at retracements off of those hammer lows to that high from yesterday, what we'll notice is that at $2.76 and a little bit of change, that's a 0.786 retracement of that move. If that holds, that would be another indication that, there's a possibility that the A to B equals CD pattern to the upside could still be in place. I don't know. Does that if I assisted at all?
No, it does. It's probably a lot trickier than I was looking for it to be more clear cut, but especially with natural gas, it's moving. It's a pretty volatile item.
Yeah.
And it's just a matter of getting a handle on it. Like I said, the cards of the call was basically. It's like I thought, okay, it looks like it was moving up, but then with today, it looked like it's really kind of coming down with some attitude.
It is.
I didn't know, and especially since on the instruments themselves, they both had volume. On the UGAZ, it had volume and it jumped up yesterday, and the DGAZ had volume and it came down yesterday.
Yeah, let me put that up on the screen for us as well. That way, at least what we can do is we can take a look at some supply and demand areas, some market profiles for you to see what they show. So on the UGAZ, that's the long. That's not. Is that what you're in the D?
Right. That's
so actually, let me switch over to the DGAZ. That's going to be better for us to look at. But it's going to show the exact opposite, which is good because this should have gotten above an area of resistance for you. Yeah, it did. So $5.09. Now, I'm on a 30-minute chart, by the way.
Okay.
So, and we'll go back and I'll take a look at the daily. But on a 30-minute chart, which we were using to identify those hammer candles on the underlying instrument, the contract itself, on the 30-minute chart here, two things. One, you're above its current market profile, which is 594. So breaking above that level of resistance is bullish for you. Also, that this is the second box off of the most recent low, and this is formed above the earlier box. That too carries with it a bit of a bullish connotation. Of course, what that also says for both you and I is that maybe it increases the test of that hammer candle. And of course, what you want to see is you want to see it break out those lows from a couple days ago. Because if it does that, that hammer candle will have failed. And probably what that sets up is a move back down to the bottom of that instrument. Inside the DGAZ on the daily basis, and it's not going to be exact. In fact, you really can't use it as an exact, but if you were, you would say, maybe it could get up there, and I don't know, it was June 4th on the contract. Is that the low that you're targeting? That would be the high and the swing point for the DGAZ. I don't know if that's I'd have to switch back
June
over.
4th would be it looks like the high, that 796. Or they're
Yeah.
about,
Yeah.
early June, that first week of June.
Yeah, I would be paying more attention to the actual price point inside. But again, from the positive side here, if this breaks the hammer candle, if it moves lower into that swing point, depending on how long you want to hold on to the trade for, you are in that unfavorable seasonal cycle historically. But you've got to. But I would say that you still want to trade other patterns out here. Now, on a daily basis inside DGAZ, it says that at $6.52, you should run into some turbulence. That's where its market profile resistance level is. So assuming you can get above 622, 652 is an area for you to be watching.
Okay. At least that gives me a target.
Yeah.
I appreciate that. Okay,
No
thanks
problem.
very much, Steve.
You
Have a
bet.
nice weekend.
Thanks. You're welcome. Thanks. That was Rich in Orlando, and that was again just really so Rich is trading the 300% ETFs for both to the long and to the short side for the natural gas contract. But it's really important to go ahead and take a look at what the actual underlying instrument is doing, and let me change the symbol out here because it looks like it's in the process of rolling over. And so what Rich is going to be doing here on the short side is he's going to be watching, let me get rid of these retracement levels here. He's really going to be watching this this June 4th candle session out here. And on that contract too, by the way, Rich, it's $2.67 on it, where it should find support. And so just simply so that you can manage and monitor that trade out there. Okay, so that takes care of those couple of things. Let's take a look at, the Dow is bounced up. It's up 55, and the S&P is up a point out here. And what does all that mean? Let's go back and take a look at the NQ out here. What that means is that, again, as we take a look at price, get the NQ still holding that rising price channel. It's only broken below it for one trading session here. That's taken us back into the into all of 2015. And we saw just a slight break of that back on June 15th, 2015. So far, that's held. Don't know what it's going to look like at the end of the day, but we do know that, it's important to identify these areas of support or resistance. As Garo and I were taking a look at inside of Gilead Sciences, as Rich and I are trying to identify those spots inside of UGAZ, DGAZ, inside the natural gas contract. Inside of the S&P futures, we can see price here coming right down into the bottom of that rising price channel. Again, the same thing, only one that closed below this level, which was June 15th. And price here, as it came below that level and closed, it held its TAS market profile support area of 2074, at least on this chart here. I don't trust the dailies on these charts here. All the other intraday time frames are correct, but the dailies, sometimes they just switch over to the E-signal to get a feel as to what's going on there. Now, what we haven't done here is take a look at any of the ETF structures. So let's go do that. I'm just surfing around. My eyes are just surfing around to see if there's anything else that's pertinent for you and I to take a look at, and nothing else really that I see. So let's take a look at the diamonds. Since the diamonds is up, diamonds are up 42 cents. Now, remember, the diamonds are up. The Dow is up. But we go back and we take a look at the summation index, still below zero. So don't want you to get fooled here. Don't get fooled again. A great song by the Who. It still is the sellers that are in control of the Dow out here. Now let's go take a look at the diamonds, though, and see what they're doing. See if there's any clues out here inside the Dow diamonds for you and I. And the answer is nah, there's really not. And, well, I take that back. In fact, I really take that back. See how quickly I can take. If we had a delay out there, I would have done that reverse signal. So what is the clue as you take a look at this? Here, let me do this for you. I'm going to clean the chart up here as soon as I get that edit button. So I'm going to just clean this up, and I'm going to ask you as you're looking at this, do you see a clue? Let me get rid of volume too. When you take a look at this chart and you take a look specifically at today's candle session, is there anything that sticks out at you? Anything whatsoever? Exactly, you're right. You picked up on that. What today is an inside bar. What do I mean by an inside bar? I mean, we can't sit in an outside bar to grab a nice Corona with a lime like you like to do on a Friday afternoon. That's not what I meant. When we get back from this break, we'll go take a look at the inside bar, and we'll see what its message is. This is Steve with TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back. Dow's up 50. S&P is off just about 2 points. Back to the Dow Diamonds out here. So the Dow Diamonds have got an inside day. Now, typically, an inside day is where you trade within the prior day's candle session. That includes the wicks, the top and the bottom. Just simply trade within it. I don't recall the statistic off the top of my head, but it's very high. It's like in the plus 60 to 70% range. Typically, an inside day, what it's meaning is that the trend that it came came from will continue. And if that's the case, what that would say here inside of the Dow Diamonds is you would be targeting this June 15th swing point. Now, that could be anywhere between the low 177.11 and the high 178.37. If we turn back on, we turn our tools back on, a couple of our tools on here, we'll also see that at 178.11 is where we've got some supply. This is our highway, our TAS market highway out here. That says 178.11 should be support inside of the Dow Diamonds. Now, back to, let's go take a look at that trade on Gilead. That Garo is in out here, and we really gave him a couple of dollars. A new profile that came on. Turned on my screen here, I think, after our call, but it really wasn't that far away from the levels that we identified as being levels that should act as resistance out here. So right now, that number happens to be 119.57. And Garo does not want to see it close above that level. That should be, that's on a 10-minute time frame out here. We looked at 10, and I believe we also looked at 30 minutes. And as we take a look at it, 30 minutes out here, 119.50, I believe, which is where it's trading at right now. 119.49 is the bottom of that box. You'd like to see that area continue to act as resistance. Again, it's about 2 o'clock in the afternoon. That means that we've got our man David White. He's going to be up next in the Tom O'Brien show from 3 to 5 out there, I believe. Let's go back and take a look at, see what we can do here for the next couple of minutes for you. Just try to make it worthwhile. With regard to the S&P 500, you've got, well, it's nearly flat. And as such, the sectors are really reflecting the same thing. Number one sector happens to be down. That's the technology sector. That's the XLK. I think still pretty much influenced by Apple. Apple is, I don't have it on my screen, or if it is, I just don't see it handy. But you've got the second sector is the XLF. It's up 7 cents, no big deal. Now, no real big volume either to the downside. In fact, pretty odd. The IWM's traded 17 million shares. Now, probably most of that volume comes in at the end of the session, with today being a rebalancing day. What the IWM has done is it has rejected its TAS market profile low 127.04. It also came back and tested the breakout from the April 15th swing point high, which was 127.13 out there. So it's still inside the upper part of its range out here. Q's volume of about 21 million shares out there. SPY's 54 million shares. So certainly no volume, but it is summertime trading. So we'll utilize some of our other tools to help us identify what the markets are going to do. We are coming into a holiday week next week. Holiday week out there. I suggest if you are short and you haven't done the work, go do the work and try to understand what the week before July 4th means and what the week after July 4th means out there, and be very specific about it. Truly, not an inclination, not an intuition, but actually do the work. I shared that with my clients out there. That way they know what to anticipate. That's really all that we try to do here, is anticipate what the markets are going to do. That's the best thing. So I'm going to anticipate that you're going to have a fabulous weekend. Make sure that you do that. Do everything you can. And just always remember that life happens for you. Thanks so much for being here, folks. Stay tuned. Our man David White is up next. Have a great weekend. See you come Monday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.